So I was watching some YouTube videos about the most popular topics and found out that insurance was among the most popular and that pays the most per view, which really surprised the hell out of me. I know they've got a lot of commercials out there, but I had no idea that your average person was that dang interested in insurance. I sold insurance for 5 years, and for about 8 years before that, I was a auto liability claims adjuster, and so I have a little bit of understanding of the insurance industry and how it all works. Today, what I thought I might do is a quick little rough draft video on the parts of your automobile policy. Since I'm driving down the road using an electronic device, which is probably illegal in my state, let's start with auto liability insurance. Most states have what is called split limits. You probably see on your auto policy. If you don't have one, you might want to pause the video and get it, or come back later and take a look at your policy while I'm going through this. Take a look and see what it says. It's usually a split limit. It might say something like 100 slash 500 slash 500. The first number represents how much your auto insurance company will pay to somebody else for property damage if you are at fault. So with $100,000 of coverage, you should be able to cover most vehicles. And what's important here is there are bigger vehicles, buses, there are more expensive vehicles out on the road, which some of them run well over $100,000. So depending on what state and what part of the city you live in, you're going to want to make sure that your liability limits are sufficient to cover somebody else in the event that you're at fault. Most states have not updated their minimum limits. It's called MFRL, minimum financial responsibility limits, which you've heard on the insurance ads on TV. Only pay for what you need or get the minimal insurance. Well, that's what they're talking about. They haven't updated them since the 70s, and so they're going to pay for probably what most cars would have cost back in the 70s. So you get to eat the rest. And insurance companies aren't fooling around. That's the amount they are going to pay. They're not going to pay any more. And if you want to be on the hook for the rest of it, that's fine. Get the minimum limits. Otherwise, it doesn't cost that much more to get sufficient. And I'm not selling insurance right now, but I can say that peace of mind is well worth it. Anyway, so you got split limits on most policies. 100 slash 100. The next number after the slash represents bodily injury. How much your insurance company is going to pay to somebody else if you injure that person or multiple people. And the final number is an aggregate number per accident, what the cap off is going to be. So say you have 100, 100, 100 limits. You've got $25,000 in property damage and $80,000 in bodily injury, and that means your company's going to pay a total of $100,000, and whoever gets there first gets the money first, after which that's it. They're done paying, and you're probably left with the remaining amount. Do the math. You don't want to be stuck with that, and a lot of attorneys aren't fooling around either. They'll attach a lien on any property you might own. If you sell it, first proceeds go to pay off that injured party, and you're pretty much screwed the rest of your life if you don't have that proper coverage. Anyway, that's the automobile liability section. I think that's probably enough for this video. In the next one, I'm going to cover other parts of your automobile insurance policy. Until then, have a nice day. Bye.